Gold is having just an absolutely unbelievable year, but it's the 20-year performance that is causing people to really start questioning, is it time to switch from stocks to gold? We're going to look at the numbers. I've got that context and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Gold is just crushing it this year. It's unbelievable. I'm not sure when you're digesting this content. It is, I don't know, it's close to May in 2025. And yeah, gold is just doing incredible and coming at a time when there's lots of volatility and concern and worry about the economy and the stock market and where things are going. And I get all of that. And so it's causing more and more people. People have always had this question. You've had this question. I've had this question. But it's causing even more of it. And that is, should I be investing in gold? And it's more so, should I be investing in gold as opposed to the stock market? I've been a financial planner for 21 years. We've got a full team of CFPs and, by the way, CPAs and insurance professionals, and we got a full team, comprehensive team, and we get this question all the time. My answer has never changed, and yet let's look at the numbers, the recent data, get that fresh perspective, and come back and answer the question. Should you invest in gold instead of the stock market? So here's a Morningstar chart. That's what I'm going to use for most of the context, but Morningstar.com, this is just comparing GLD, and yes, that's an iShare for gold, so it's not exactly matching the spot price, but it's a hopefully a good proxy, compared to SPY, which is the same company, SPDR. Instead of GLD being the SPDR Gold Index, the ETF, the SPY is the S&P 500 index ETF for SPDR. So this is just comparing year to date at the time I'm recording, and so going to be a little bit dated by the time this airs, but you can see gold just absolutely killing it, almost 30%, up 30% year to date, just off of all-time highs at the time I'm recording this, but just basically at all-time highs, where the stock market's had some jitters. Yeah, it's had an unbelievable past couple of years, but this year negative, and so causing more and more people to say, just should I be looking to invest in gold? That's the year-to-date perspective. Now, 5 years tells a very, very interesting story, though. Take a look here. This difference between GLD and SPY, they're basically the same. Now, you might say, well, wait a second, this going back 5 years, we just missed the COVID crash. We did, and if you do include the COVID crash, gold is outperforming. But let's just, being a little bit pure here, going back 5 years, they're neck and neck, but they took a very different path to get there. The S&P 500 basically going straight up with all the money printing and stimulus coming from COVID, a pullback there in 2022 as we sort of digest it, and then another surge in 23 and 24 between, stubbing its toe this year. Gold, and this is going to come back to us. I'll hit this later. Gold, after all the money printing, did nothing. It did nothing. And most people think it's an inflation hedge. It did nothing while we had soaring inflation. It's just been recently that it's done the hockey stick. But both have been unbelievable. And to say that gold over 5 years and the S&P are basically neck and neck, and you could squabble and, oh no, one's a little bit higher, one's a little bit lower. It's unbelievable considering how fantastic of an investment the S&P 500 has been over the past 5 years, basically outpacing any other stock-based or market return. Gold is right there neck and neck with it. Now let's zoom out even more. And this is what the headline was. Now let's zoom out 20 years. And because of the data from Morningstar between GLD and SPY, I can't get the full 20 years, but it's close. And I wanted to go back to 2000 to today, but I couldn't get that chart either. But it's going to paint the same picture. Gold is actually outperforming the S&P 500, outperforming the stock market over the past 20 years. This is a rare circumstance, and again is causing people to say, wait a second, should I flip? Should I switch? I've been wondering this for a long time. Is it time? Does this prove it? Is the case closed? Is it time to invest in gold as opposed to the stock market? Because again, this 20-year run for the stock market has been pretty incredible, the S&P 500, and yet gold has outpaced it. But guys, context is really, it's time frame. Context is really what drives the perspective here. I'm going to add two more, and I know you're probably graphed out right now, but embedded within that 20-year is actually two different lost decades. One lost decade by the S&P 500, and you know that to be, from 1999 to 2009. We had the two worst stock markets since the Great Depression, the tech bubble as well as the great financial crisis. And therefore, of course, when you've got those two huge events embedded in that 20-year number and this surge in the money supply and optimism towards gold just recently, the 20 years, gold is going to look pretty favorable. But if you zoom in here from 2010 until right now, you're going to see that gold had its own lost decade. And no one calls it that because while gold is a very intriguing investment, most people don't look at it in the same way that they, and analyze it, critique it the same way they critique the stock market. But you can see really from 2009 up until just recently, the gold has basically not gained a lot, where all the S&P 500 has absolutely surged from 2010 until today. It's not even close. Not even close, even though the past 5 years has been close, going back to 2010. So the past 15 years, it hasn't been close. And then if we zoom out even farther, and this is as far as I got, I had to switch off of Morningstar to a different article even, but this is just showing the Vanguard stock market index compared to gold spot price. And this is going back to 1975. And you can see some surges here, some times when gold has outperformed, some times when the stock market S&P has outperformed, but over a long time, it's not even close. It's not even close. The S&P 500 has been a superior place to build wealth and grow wealth than gold. So it really does come down to perspective, looking at the right time frame and time horizon and determining, well, how does gold operate compared to the stock market? But I actually don't think that's the question. So this context, this recent surge in gold has not changed my answer, my viewpoint as to whether you should invest in gold or stocks, which one's a better investment. I think that's the wrong comparison. The real question isn't should you invest in one or the other, it's what's the function of each? What's the function? What's the purpose of each? Why you would invest in each? Most people look at gold and say, I would invest in it for one of two reasons. The first is it's a safe haven. And people say that it's a good store of value. If something goes wrong, I've got my gold, it's a safe haven. Well, if you're not holding tangible gold, which can be unpractical, can be expensive, can be cumbersome, if you're holding a gold investment, it actually, from a risk management standpoint, from a risk measure, is pretty risky. Looking at the standard deviation over the past 10 years, it's almost double as risky as the stock market. So for a store of value, it's not a good preserver of value, right? Cash would be. So instead, people look and they say the store of value means, well, it's going to do well when the stock market's not doing well, and it's going to hold up its value. And there's been times, there are times when that is certainly true, but there's been other times when that hasn't been the case. And so store of value is one reason, but the other reason people often say, no, you should have some gold, is for an enormous financial catastrophe. The entire system goes down for hundreds of years, thousands, really. People have desired gold. There's been value, inherent value there. And so people think, well, if there's a financial catastrophe, I still have that. I still have my gold. And what will happen to stocks and the financial crash and all that sort of stuff? And in that instance, can't argue with that. That's certainly valid. And yet, how much of your wealth, how much of your money, how much of your resources do you want sort of kind of positioned as if, well, that will succeed if there's a great financial calamity? To me, the function of stocks is to outpace inflation over the long term. And when you look at it, are there pockets of time where stocks go down and inflation is up, or when stocks go down and cash or bonds or gold outperform? Absolutely. Yes, stocks are volatile. Mathematically, not as volatile as gold, but it's volatile. The purpose of stocks is to build wealth over time that outpaces inflation. When you get down to it, the purpose of gold is typically to to keep pace with inflation, to hedge against a financial crash or too much money printing. And yes, that can move in very different ways than just that kind of in a one-to-one direct way, but it's positionally and functionally, it's different. And therefore, I wouldn't play the comparison, should you invest in stocks or gold? I would invest in stocks, and if you're concerned about, managing inflation and potential financial calamities, hold a little bit of gold as well. I just wouldn't have that comparison to say it's one or the other. So apply that, work with your certified financial planner, see if that's something that you should hedge against, and therefore how much of your overall wealth, your portfolio, should you have in gold? 1%, 2%? What should it be? What's appropriate for your situation? Work with your CFP on that. If you don't have a CFP on your team, you can contact one of my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go on and take your next wise step in your financial life.